Jo here again, CEO and analyst from Market Monkey Australia. And in this session, we're just going to have a quick look at a really common chart pattern with a particular focus on people who generally follow us who are medium and usually long-term investors, not so much trading. And I think for us, for our community, we find that the hardest thing people find is knowing when to get out of a strong stock before the trend ends. And so we're just looking at a few different patterns in a series about when to get out of a long trend. And I guess if you're trading, these patterns appear on all time frames. So these same principles apply. So today I'll show you one of the most reliable reversal signals for protecting your profits, the head and shoulder pattern, and how you can use it as a clear exit strategy. So we'll look at three ASX examples, Treasury Wine Estate, and then also Ramsay Health Care, and then lastly Woodside Energy. So we'll just kick off, I guess, with Treasury Wine Estate. Um, so I guess what you can see in front of you is a standard head and shoulder pattern, and as you can see, often the chart's not a very it's not a clean, perfect example, but this one on Treasury Wine Estate is a pretty clean example. And in the head and shoulder pattern, you can see that this is pretty much where we see a chart shift from being sort of strong to then weakening. And this is a really common sort of pattern that happens when, I guess, a price pattern is weakening. So often it will form usually after a long uptrend, but you can see here on Treasury Wine Estates this is after a downtrend. And usually there's the first thing that appears is a left shoulder, then followed by a higher head, and then finally a right shoulder, which fails to reach the previous high. So when the price then breaks below the neckline, that's a confirmation that this trend, and if this is the end of an uptrend, it's when an uptrend is losing steam. Or here you can see this was pretty much a sideways pattern also when it's breaking out of this sideways pattern. So for our community, usually which are medium to long term traders and investors, it's not really doesn't mean to panic. It just means that maybe it's time to start thinking about trimming up your position or even closing out of a position if you haven't already, while the prices are still high before the heavier sort of selling picks up. And I guess with an investor's mindset, it's pretty much about protecting your profit and not trying to predict the bottom. So we're really wanting to exit when that weakness falls into place and not acting on fear. So it's not really about trying to pick the top here. It's about recognizing when the market is quietly shifting away from strength and optimism into some more hesitation. And I guess you can always back this up by company financials, etc. But that we know that the chart gives us an indication of what's happening in the market. So this shift gives us lots of time, plenty of time to exit while it's still strong. We can lock in our gains and move either to cash or to move to a different trade altogether. And so the exit process would involve, obviously, we're wanting to exit here. We do need to sort of see this pattern arise. So we want to see the shoulder, the head, and the right shoulder. And I love the TradingView AI indicators in the premium package, which automatically puts this on the graph for us, which I love. And you can also sort of watch volume, although sometimes on these larger blue chip stocks, the volume might not shift too much. Although you can see the volume pick up towards the big sell-off after the end of the head and shoulder pattern. And so I guess once we see, I guess, a soft exit if the price touches the neckline, either here if we think it's turning into that pattern, or particularly here at the end of the pattern, this end of pattern, I guess, would definitely be a full exit, particularly once it closes out below that neckline. So yeah, it's a good indication to get out of this trade, or if you're shorting, maybe an opportunity to get in. So let's have a look at Treasury Wine Estates. So obviously this is really our classic head and shoulder pattern, and it's ideal for spotting, I guess, an exit early, or or at the end of this sort of sideways trend. And usually it does happen after a long run up in a pattern, and we get this left shoulder forming, and then we do see the stock push higher again, and then obviously we failed to get to that same high, and so we create, I guess, this second shoulder, which is a clear warning that we do see some weakness coming in. So this is our classic pattern, but let's have a look at a couple of variations. So let's jump over to Ramsay Health Care. And I might come back to the targets in a minute. So Ramsay Health Care, so that you can see that this one's a little bit different. We've got a shoulder and then a low and then a head with a high and then a lower low and then a shoulder a bit lower than the left shoulder. And when we see this strong sort of diagonal pattern, this is even a stronger indication that this trend is likely to decline quite rapidly. And then we would look at, I guess, we might just talk about the target here, look at the distance from our neckline to our head. And there's a couple of different measurements here. But if we have a look at, say, the distance here from there to there, so that's about 60%. So we could say a base target there, but usually the measurements, usually around the middle of the head pattern to get down to our target price and this would be about 100%. So yeah, usually the measurements from the middle of the head to the middle of the head base. So let's get rid of that there. So we can see roughly where the target or the expectation is where this trend will end. And lastly, if we jump over to Woodside, we can see here that this is, I mean, there's some things that are common about this one. It is sort of a strong uptrend, but then you can see that the left shoulder, the head and the right shoulder is actually higher in this case. And so we get, when we draw that line across the base there, that neckline, we can see that that actually points upwards. So once again, this is not really a classic head and shoulder. The left shoulder is sitting below the right shoulder. So it's sort of an asymmetrical pattern. And this is quite common on energy and commodity stocks, but it's still signaling that this trend is coming to an end. So if we have a look here, how can we use this? For long-term investors, you can see here that I'm on the weekly chart. So daily charts will also show this up, but weekly charts for long-term investors are great to spot these bigger patterns. And then we would really be looking to exit at this neckline, or you may even be exiting before that. We've got Market Monkey, we have a few other different indicators that indicate a change in price direction. But as this right shoulder falls, we may be exiting as we exit down this right shoulder position and then looking to be completely out and exiting the stock at the bottom of the neckline. And then I guess the expectation would be that the trend would continue to our target point, or if you were shorting this, obviously that this would be your target at the end of this trend here. So I guess some takeaways from the head and shoulder pattern is that it's a really reliable and visual cue that the trend has finished its run. For medium and long-term investors, it's not about really shorting it in this case. It's about protecting the profits that we've earned from these larger moves before obviously the crowd realizes the move's over and then the selling begins. And so you can see how that varies across different stocks. So Treasury Wine Estate, we had a very standard sort of pattern, yet to reach its target. And then Ramsay Health Care, you can see we had sort of a diagonal sloping head and shoulders, and Woodside, an upward sloping head and shoulder. So the message is the same really across all of these examples, is that we don't really want to wait for confirmation that we're in this fall as investors. We do want to plan our exit and protect our profits and then get ready to get on to the next opportunity. So this is obviously one of the smartest and simplest ways to manage our risk and when we're managing our portfolio. So I hope you enjoyed this explainer of the head and shoulder pattern. And hopefully you can start to spot these and spot some different opportunities on some of your charts, whether that be on the weekly or the daily charts. So yeah, thank you for listening, and we'll look forward to producing one of our next chart pattern videos for you. If you're in TradingView, feel free to grab our indicators, which we've got the guppy multiple moving averages here, and we've also got some support and resistance lines. So these are just called our Market Monkey indicator set 1, GMMA open, and Market Monkey indicator set 6, support and resistance. So that's just some of the indicators in our published sets. Um, and there's more trading information on our website, marketmonkey.com.au, if you want to pop over there and have a look. Enjoy your day and happy investing and trading.